Oke, Assalamualaikum warahmatullahi wabarakatuh. Today I will presentation about some materials. And before we start, let's pray. Let's say Bismillah together. Bismillahirrahmanirrahim. And let me introduce myself first. My name is Fadian Aiza Shafitri with the study number 20200 and I'm from IPIF student, International Program for Islamic Economics and Finance Department of Economics, Faculty of Economic and Business, University of Muhammadiyah Yogyakarta. So this is the first material about national income accounting. So what is national income accounting? That is a measurement system used to estimate national income and its components. And the total income equals the yearly amount earned by the nation's research or the tech factor of production. Basically, national income is divided into three categories, including first is GDP. So GDP is the total market value of all final goods and services produced by factor of production located with a national borders. GDP measures the dollar value of final goods and services produced per year by factors of production located with a nation borders. And the second is intermediate goods. So it's goods used up entirely in the production of final goods. In the process of production, intermediate goods can become part of the finished goods or be transformed by recognition. Therefore, the product cannot be used immediately but must be processed first. For example, of immediate good is flour. So, if we want to make some cakes or a bread or many things, or made is from flour. So for the example is if we want to make some cakes, we need to flour. So because the flour is the important ingredient for cakes, for bread is important ingredients. So flour is intermediate. And the next is value added. The dollar value of an industry sales minus the value of intermediate goods used in production. And for example, raw materials and parts. Distinguishing between nominal and real values. Nominal values is measurement in terms of the actual market price at which goods are sold, expressed in current dollars, also called money values. While the real values, that is measurement after adjustments, have been made for change in the average of prices between years, expressed in constant dollars. And we into next material is consumption and investment. The economic performance of a country is strongly influenced by consumption and investment. Of course, performance indicators in the economy are economic growth, there are economic growth and unemployment. So the economic growth is to investment and investment to saving, and the saving equal disposable income minus consumption. And what is consumption and investment? And consumption in general, the largest component of GDP for a country, while the investment is all forms of additional productive assets. Capital goods are used in the process of producing goods and producing goods and services. And there are three determinants of the level of investment. And there are first is revenue. Revenue, if the economy is rising, so the investment will be increased. That is revenue. And the second is cost, is related to the cost of using money used to make investment, where investment costs are influenced by two things, namely the interest rate and tax. And the last is expectation, the expectation of entrepreneurs for future conditions. And the next material is income and spending. What is income and spending? The income is the result from the activity of selling goods or service in a company within a certain period. And actually, it is not only the result of sales, but the income of a company can also come from the interest on company assets used by other parties. And so by using the labor sectors report story, it is possible to obtain the level of income of citizen from the salary files. Typical traders use this data as a clue to potential consumer customer demand and spending for a variety of different sectors. And for the spending, is payments made a present for future obligation in order to obtain some benefit, if made to increase fixed assets, the expenditure is called a capital expenditure. And if it's done for operating costs, the expenses are called operating expenses of the two things. The cash costs are to get goods, service, or business results. Okay, and I will tell you about our faculty, our program. If you want to contact our and for tell or for ask about our information. For more information, you can check it in our social media, maybe in website, and you can search in IPIF IPIEF dot umy dot ac dot id. And for if you want to follow our Instagram in economics FEBUMY or IPIF FEBUMY. The economics FEBUMY is for faculty economics, but in our program, because in economic in OME there is two program, in regular and IPIF. IPIF is international program, regular and international program. So if you want to follow our Instagram, you can follow economics FEBUMY for more information about information about the economics FEBUMY. And if you want to know more about the international program, you can follow the IPIF FEBUMY at IPIF FEBUMY. And if you want to WhatsApp our staff in UMY with the regular program, you can add the number where in behind you can add 280, and for international program is 380. International program or EP. And if you want to come to campus, if you want to act in campus, or you want to see, or you want to visit on traveling in there, you can go to the Brawijaya Street in Taman Tirto, Kasihan Bantul, Yogyakarta. Yeah, where is the code post is 55183. So you can search more information in there with the lecturer or our staff. But if you want to search now in the website, you can check our website in economics FAB economics strip fab.emu.ac.id or ipip.emu.ac.id. Okay, that's all for me. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.